I often find that people conflate principles of two different real estate sale tax concepts. So this week, I'm going to spend some time talking about the differences and details of a 1031 exchange and the capital gains exemption. On the most basic level, the capital gains exemption is a tax benefit for the sale of primary residence, and the 1031 exchange applies to the sale of an investment property. Another key difference is that to benefit from a 1031 exchange, you have to purchase a new like-kind investment property with the proceeds from the sale of the original investment property. With the capital gains exemption, you benefit at the time of sale, and there's no requirement for what you do with that money afterwards. You never have to buy another piece of real estate again. To benefit from the capital gains exemption, you need to have owned that property as your primary residence for at least 2 of the previous 5 years prior to sale. If you've done that and you haven't benefited from the capital gains exemption within the last 2 years, you are exempt from paying up to $250,000 in capital gains if you are single, and up to $500,000 in capital gains if you are married filing jointly. A 1031 is a little bit more complex. In order to benefit from it, you have to purchase a new like-kind investment or business property with the full proceeds from your original sale. You also need to make that purchase within a very specific amount of time and declare the properties that you might purchase within an even shorter amount of time. You also need to make sure that you have the proceeds from the original sale go to a qualified intermediary and then purchase the new property with those proceeds from that qualified intermediary. Now also remember that a 1031 exchange is not exempting you completely from payment of those capital gains taxes like the capital gains exemption is. Instead, you are deferring your tax payment on the capital gains from the original property to another property. And so you're just deferring them, you are not eliminating them. As always, before you do any of these, it is important to consult with a tax professional. They can provide you very specific advice based on your financial situation and the details of your properties. For more details on the capital gains exemption and the 1031 exchange, just check out this week's Ask Eli column. Thanks for watching.